Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
More interesting stock picks from our strategists. This time around, our ETF Research Director, Nina Mishra, and our Senior Equity Strategist, Kevin Cook. Nina, we're going to start with you because you've got something here interesting. Thor Industries,
yes,
manufacturer of recreational vehicles.
Yes.
So with maybe summer not far off, right? People thinking about camping, traveling the countryside, and one of those huge vehicles.
Right time to look at the stock. So they make RVs. They make both towable RVs and motorized vehicles. And they are market leaders in both those segments. Okay. I think number 1 and number 2 positions respectively for those categories. And they have a very impressive record of profitability. Since their founding in 1980, they have been reporting profits consistently every year. So that's 35 consecutive years of profitability.
Wow.
And if you look at last 5 years, their earnings have grown at a rate of 17% annually. And they have also been returning a lot of cash to shareholders. Their dividends have increased by 5% annual rate over the past 5 years. Had excellent results last quarter. And if you go to detailed estimates, they actually beat both on top and bottom lines. You see a nice earnings beat of 56.45% last quarter, and the resultant increase in estimates by analysts from 4.41 to 4.76 and from 4.82 to 5.05 for the current year and next year.
All right. That's what we like, companies that always make money.
Yes. They have a decent VGM score of B with A-style score for growth. And if you look at the industry, it is number 3 out of 265 Zacks industries as of now. That is top 1%. So that's because low oil prices and improving labor market, they are both good for the RV industry. And as you mentioned earlier, we are now approaching the seasonally strong months for the industry. So I expect improvement in earnings as well as the share price going forward.
All right. Well, if RVs don't get your heart started, Kevin Cook, maybe Edwards Lifesciences can.
Yes, very exciting company. They medical device technology for the heart. And what they're doing is they're replacing open heart surgery by replacing heart valves using a catheter. And we've all heard about catheter procedures in the age of heart disease.
Right.
Having open heart surgery is risky for anyone. It's especially risky for older patients. So if there's a valve problem and a surgeon can install a new heart valve using a catheter, this is what Edwards does. The stock has just exploded to new all-time highs, shot through 90. We're trading around 105 right now. And this is on the release of data earlier this month. They did a 2-year study tracking patients who had open heart surgery and patients who had a new heart valve installed with the Edwards technology. And the results were outstanding. I mean, they were looking for some kind of equivalency. It just blew it away. It's obviously superior for not just survivability, but the long-term health of the patient.
Sure.
Let's take a quick look at the price and consensus chart and why we bought the stock in the mid-80s last month. So here's the price and consensus chart. The stock was milling around in the 80s, and estimates started to move up. It was a rank 1. So I saw the upcoming data release, and I said, we've got to buy it here. Once the data was released, the stock blew through 90, up through 100, and hasn't looked down since, trading around 105. Let's take a quick look at the detailed estimates and see where analysts are now. If I scroll down here, and this, you can get access to the detailed estimates as a Zacks Premium member. You can see that the majority of analysts, 9 out of 13 right now, have raised estimates in the last 7 days for the coming year. You're looking at just over $3 EPS. Now, the stock is expensive. It's not cheap, right? Trading at 105. Let's say it earns $3.15. That's 33 times. But it's an exceptional company in an exceptional field, right? Competition would be Medtronic. Medtronic is also developing their own similar procedure. So why I actually sold the stock. So in full disclosure, I do not own it anymore. We owned it at FTM. I sold it. Why did I sell it? Well, we had a good gain on it. We had a very quick 20% gain, and it was reaching what the analysts think is fair value. A lot of price targets went up, but the range is $100 to $110 for most of the price targets. Because of that valuation, how quickly can it grow? Yes, it's the superior technology for installing a new heart valve, especially for older patients, but the earnings growth is not going to be that rapid. You're looking at mid to high teens for this year and next year, which is still reasonable growth, but it's not gangbusters growth to pay more than 35 times. So there are some price targets, 110, 115. On Friday, right after I sold it, Goldman raises their price target to 125. Oh. Now, here's the thing. We bought it when clearly there was enough uncertainty going into those results in early April. What if the results were bad? What if it's not superior? What if there were more deaths? It turned out that wasn't the case, but we bought that uncertainty under $90, took advantage of it, traded it well. Now there's new uncertainty because Goldman's saying, hey, this stock should have a higher valuation. Maybe you do pay 35 times for it. My recommendation is you want to buy it on the dips. You want to buy Edwards Lifesciences anytime it gets near 100. I don't think it's going to fill the gap down to 90 anytime soon. So this is a stock that you want to own for a long time, and you want to be buying on the dips.
All right, so we're sitting here talking on April the 11th. The news you're talking about came out on
early April. Last week was the data. April 2nd or 3rd, it was the weekend of. It was that weekend of the 2nd, 3rd, and 4th because it was the American College of Cardiology. All the physicians and surgeons are together talking about the latest heart research. That's when the data came out, and that's when the stock has taken off.
Okay. And Nina, do you own your stock?
No, I don't.
All right. Check out more stock picks on our website, Zacks.com. If you're not there already watching this video, get on over. You can link to them all right off the homepage. And don't forget, if you're watching our videos on the YouTube platform, there is where you can subscribe to them and even comment on them, and the feedback is welcome. With Nina and Kevin, I'm Terry Ruffalo.